What is up, YouTube? It's your boy Johnny A, and I'm back at you guys with another video today. Hope you guys are all doing good on this Saturday. So today I'm going to do a weekly recap video. I'm going to show you guys on how my Robinhood portfolio is doing, what I'm holding, how my positions are doing in my portfolio. So you guys do not have to follow what I'm holding. You guys don't have to buy what, stocks I have. You guys do what works best for you. This is just my journey, so I'm just sharing it here on YouTube. Again, I'm not a financial advisor. I always try to remind you guys on all my videos, do your own research because I am not a financial advisor. But if you guys do have any questions, I always try to help if I can. I'm learning as I'm going. So yeah, if you guys are also new to the YouTube channel, definitely hit that subscribe button down below to support me here on YouTube. I appreciate each and every single one of you for supporting the channel. All right, so let's head on to Robinhood. And I'll show you guys how everything is doing, how the portfolio is doing. So we're at $58,197.23. So it looks like for yesterday, I'm assuming these are the numbers, I was up $716 overnight, up $223. In the past week, I'm up $753.86. In the past month, I'm down $4,071. In the past 3 months, down $6,181. Year to date, down $4,953. In the past year, I'm up $3,421. All time, up $4,401. All right, as far as margin, I do use margin in my portfolio. I've used $22,345.36. Robinhood is allowing me to use $83,323. And you can see my margin status is low risk. I have a 57.70% margin buffer. So that's good to have. You got to have a good margin buffer for your portfolio to be at a good, at a low risk. And for that $22,000 of margin, I'm currently paying $3.47 daily of interest. All right, so the dividends that I get in my portfolio pay back the margin, and it pays the interest as well. So I'm just accumulating more of the margin. I'm using more of it, and I'm not gonna use all of it. I want to be on the safe side of things. I'm also putting money in here every 2 weeks for my paycheck. So I'm trying to compound the dividends each and every single month. So that's my goal. To get it to a point where I could, I won't have to use as much margin anymore. If I'm making, like, for example, $10,000 a month, then I probably won't need to use as much margin anymore. I'll just use my regular paycheck and reinvest the dividends that I'm already making. So that's the goal, guys. All right, let's head on to my weekly dividends. So you see I have everything separate. These pay me every single Friday. YMAX, YMAC, QDTE, XDTE. So I'm always going to be very transparent with you guys. I'm not like other YouTubers that just talk about what they have and don't even show the numbers. If I'm down big in a play, I'm going to show you guys. If I'm up big in a play, I'm going to show you guys as well. So 969 shares of YMAX. Market value of $13,000. Average cost is $17.92. I am down 21%, down $3,657. I like YMAX so far, even though it has been dropping in price. I like it because it holds all of the YieldMax fund in one fund. Even though there are crappy funds in this, I'm still liking it because it pays every single week. Now, if it does a reverse split, which could happen, I don't know if it's ever gonna get back up to $20 like it was when it first came out. But if it does do a reverse split, then yes, I will get rid of YMAX. But for now, I'm holding on to it, even though I'm down $3,000. I think it's paid me a little more over $3,000 in dividends. YMAG, the Magnificent Seven, 464 shares. I'm down 17%. With YMAG. And then I got QDTE, 107 shares. I am down 6%, down 285. XDTE, which is the new position I added this week. I got 5 shares. I am down 0.05%. So I dollar cost average and buy below my average cost and pick up more shares that way, even if it's just fractional shares. So all of these right here, you could buy fractional shares too, so that's a good thing. And these are my weekly dividends. They pay me every single Friday. All right, so then I got my first week. I got 4 stocks: Tesla, SPY-T, QQQT, TSLP. So Tesla has been doing terrible for me ever since I got in here. This is from YieldMax. It tracks Tesla, and it has been horrible. 161 shares. Average cost is $12.95. I'm down 37%, down 786. The dividends haven't made up for my total return. So I'm actually losing a lot of money in this play right now. So Tesla, if I could get my almost my total returns back, then I might consider getting rid of Tesla. And this one could also be in danger of doing another reverse split. So that's for me, that's a no-go. I don't like any stocks or ETF that do reverse splits. So Tesla might go in the future. SPY-T I like a lot. Defiance. This is from Defiance. This tracks S&P 500. 104 shares. I'm down 6%. And average cost is $18.88. QQQT from Defiance I like it as well. It tracks the NASDAQ 100. 108 shares. I'm down 5%. $110. And then I got TSLP from Curve. I do like the Curve funds so far. Still pretty early to tell how they do in the long term. This one tracks Tesla. 73 shares. I'm down 7%. So you guys can see Tesla is the biggest loser in the first week. But those are my 4 stocks for the first week that I have. These pay out the first week of every month. Tesla, it fluctuates. It could be the 3rd week, 2nd week. YieldMax has their distribution schedules all mixed up. So I used to have it I have it in the first week because Tesla used to pay every first week of the month, and now it's different now from the YieldMax schedule. All right, so 2nd week I got 5 stocks: Nvidia, Phoebe, Realty Income, XPay, and MSFY. So Nvidia from YieldMax, this one tracks Nvidia. 360 shares. I'm down 25%, down $2,113. Now I like this one. I think Nvidia is a great long-term hold. A great company, in my opinion. It's a great stock to hold for the long term. I think Nvidia will be doing. Hopefully, it does better in the next couple months. But again, if this one does kind of like a Tesla or reverse splits, I get rid of it. The YieldMax ones are very volatile from what I've been seeing compared to any other funds that I have. But, Nvidia, it has been either around like $16, $20, $21. I haven't seen it go to like $12, $10 yet, at least. So right now for me, I'm holding it and buying more around this price. Even though I'm down 25%, I could just keep on dollar cost averaging. And this one is actually going to pay dividends this upcoming week. And then I got Phoebe, which tracks Meta from YieldMax. 63 shares, I'm down 7%. This one hasn't been too bad with the NAV, with the total returns, even though I'm down 7%. I've been buying more around this price range. And obviously, I believe in Facebook Meta for the long term. Realty Income, this one, really, if you guys don't know who Realty Income is, they're probably one of the biggest well-known monthly dividend stocks out there. 71 shares, I'm up 6%, has been doing great. The dividends increase every quarter. I can't complain with Realty Income. Probably one of my best positions in my portfolio. XPay, this was from Roundhill. This tracks the S&P 500. 48 shares, I'm down 0.26%. So shout out to Oracle for putting me on XPay. MSFY, this one tracks Microsoft. This is a Curve fund. 43 shares. I am actually up in this play, 0.88 cents, 0.09%. So It's actually above my average cost. So usually when it's above my average cost, I don't buy any shares. I usually wait for it to go below. So this one doing pretty good so far. And those are my 5 stocks for my second week. And then we have 4 stocks for my third week. So I got rid of PSEC, which I mentioned in yesterday's video, I believe. And then I have these. I added Goop. That's the new position. So I got Coney, Nestle, AAPY, and Goop. Coney tracks coin from, this is from YieldMax. Another one that's probably on the verge of doing a reverse split unless crypto Bitcoin tends to go on a run. 476 shares, I'm down 47%. I'm almost down 50% in this position. Not looking good. Average cost is $16.17. Again, reverse splits are a no-go for me. Selling it if it does a reverse split. Netflix, this one tracks Netflix from YieldMax, 60 shares. I'm down 1%. Not too bad. I'm buying below my average cost as well. Doing so far pretty good. AAPY from Curve tracks Apple, 80 shares. I'm down 6%, down $134. Gonna buy more around this price. Goop, this one tracks Google from Curve, 5 shares. I'm down 0.04%. So I just got in this position. I gotta keep on buying more shares of this. All right, so those are my 4 stocks for the third week, and then I got 5 for the final week of every month. MSTY, AMZ, FEPI, AIPI, NFLP. So Misty, this one tracks MicroStrategy. This is a YieldMax one. This one has been paying pretty good dividends in the last couple of months. Even though I'm down 23%, I think the dividends I've gotten, I've made way more than that. I think I made like $4,000 in dividends so far. 299 shares, average cost is $28.22. Around this price range, I'm buying more. Again, I do want to eventually get rid of this position, even though the dividends are nice. The reason being is because that maintenance ratio is 60%. I want low margin requirement names. I don't want anything above 50%. So that's why I got rid of PSEC. It was 50% for PSEC. This one is 60%. The dividends are nice, but I want to have a good margin buffer to keep on using margin and, accumulating more and more and more that way. MSTY is good though. If you're just using individual cash to buy this, then that's great. Margin is a little bit more risky. So if I can make my total returns back, I'll eventually get out of Misty and put the money elsewhere. AMZ from YieldMax, 73 shares. I'm down 9%. This one still up for debate. I got to see how it does in the next couple of months if I'm deciding to get rid of it. FEPI, I do like FEPI a lot. I like the Rex Fang, the Rex shares funds they have so far. 53 shares, I'm down 8%. Gonna keep buying more of this. AIPI as well from Rex shares, 48 shares. I'm down 6%. Gonna buy more around this price range. And then I got NFLP from Curve. This one tracks Netflix, 94 shares. I'm down 1%, down $46. And this one as well is paying this week. So we got NFLP, FEPI, AIPI paying this week in dividends. So keep an eye out for that. I'll make a video on that. And then I got my 2 growth and dividends for the long term. SCHD, 73 shares. I'm up 12%, up $231. And then I got the VOO, 4 and fractional shares. I'm up 18%, up $379. So these are for long term, 5, 10 plus years to hold. And they pay a dividend every 3 months. So I like these a lot. And I also have SGOV, but this is just for taxes. I got 73 shares. I'm up 0.12%. It doesn't matter. This is just for taxes. Whatever I got to pay in taxes, I'm going to take the money out of here. I have $7,000 in here. So if I got to pay like $3,000 in taxes, when I do them, I still got to do my taxes. Then I'll take the money out of here, depending on how much I got to pay. So that's basically just why I have SGOV. I don't have it for like growth or anything. And that's about it, guys. That's what I have in my portfolio. We're at 58,000. I mean, I know a lot of people are like, oh, my portfolio hasn't been growing. Well, the market hasn't been too good. The market has been down the last almost 2 weeks. A lot of basically just buying below my average cost and dollar cost averaging right now. So that's the best I can do. These are the positions I'm gonna have for now. Depending on if any of them do reverse splits or anything like that, then I'm gonna get rid of them. I like having stocks that I could build up my share count and hold for the long term. So yeah, guys, that's about it. Hope you guys enjoyed the video. Like I said, if you're new to the YouTube channel, definitely hit that subscribe button. You can also follow me on Instagram, on TikTok, on Twitter. Check out my links down below. If you guys want to sign up for Robinhood, definitely use my link and you guys get a free stock. So thanks so much for tuning in. I'll see you guys on the next one. Peace.